What if I told you that every time you swipe your credit card, a bank has a chance to make money? Credit cards are one of the most popular financial tools in the world. Millions of people use them every day to buy food, clothes, electronics, and even pay their bills. But have you ever wondered why banks are so eager to give you a credit card? Credit cards make banks billions of dollars every year. In this video, you'll learn exactly how banks make money from credit cards and how you can avoid the common traps that cost people thousands of dollars every year. A credit card is not free money. When you use a credit card, the bank is lending you money. You can spend that money now and pay it back later. If you pay your balance in full every month, you may not pay any interest at all. But many people make a mistake. Instead of paying the full balance, they only make the minimum payment. And that's exactly what banks want. The biggest way banks make money is through interest. Imagine you spend $1,000 on your credit card. If you don't pay it back on time, the bank starts charging interest. That interest can be very high. In some cases, it can be over 20% per year. The longer you take to pay your debt, the more money the bank earns. Many people end up paying hundreds or even thousands of dollars in interest over time. Banks also make money through late fees. If you miss a payment deadline, you may be charged an extra fee. It might seem like a small amount at first, but when millions of people miss payments every year, those fees add up to billions of dollars.
Banks also make money through late fees. If you miss a payment deadline, you may be charged an extra fee. It might seem like a small amount at first, but when millions of people miss payments every year, those fees add up to billions of dollars. Let's look at a simple example. Imagine that John buys a new phone for $1,000 using a credit card. At first, he plans to pay it back quickly, but instead of paying the full amount, he only pays the minimum payment every month. As time passes, interest keeps getting added to the remaining balance. After months or even years, John may end up paying far more than the original price of the phone. What started as a $1,000 purchase can become much more expensive. This is exactly how many people fall into credit card debt. Another thing many people don't understand is the credit score. Your credit score is a number that shows how responsibly you manage borrowed money. Banks, lenders, and even some landlords may look at your credit score before making decisions. Paying your credit card bills on time can help improve your credit score. Missing payments can hurt it. This is why responsible credit card use is so important.
Banks can make money even when you pay your balance in full. Every time you use a credit card at a store, the business usually pays a small transaction fee. That means banks earn money from merchants every time a customer swipes a card. So even responsible credit card users help banks make money. Many people fall into the same traps. They spend more than they can afford. They only pay the minimum balance. They ignore interest rates. And they use credit cards for things they don't really need. Over time, debt grows larger and larger. This can create financial stress and make it difficult to build wealth. The good news is that credit cards are not evil. In fact, they can be useful if used correctly. Always pay your balance in full whenever possible. Avoid unnecessary purchases. Pay on time every month. And treat your credit card like cash, not free money. When used responsibly, credit cards can help build a good credit history and make managing finances easier. So how do credit card companies and banks make billions of dollars? They earn money from interest charges, late fees, and transaction fees. The truth is that credit cards can be either a powerful financial tool or a financial trap. The choice depends on how you use them. If you found this video helpful, subscribe to Akash Capital for more videos about money, finance, investing, and wealth building. Thanks for watching, and I'll see you in the next video.